a sense of capital. Aloha. Okay, the music should be live. I'm live, and my chair is still making some awkward sounds. Very sorry for this. However, always very happy to stream. Always happy to have you in, guys. So one more time, aloha to all of you who joining and who will later on watch this stream on a recorded base. Your host of today, as always, is Julian. I'm very glad to have you in, guys. And today we will cover one more time on the final stage the earnings results of the Southeast Asian deliveries, mobility and financial service provider Grab. But before we jump in and talk about all the details of the press release, the letter, and of course the call which was executed through the management and attended by the different kind of analysts, I want to quickly address a disclaimer to you guys that in the upcoming minutes, I guess maximum 1 hour, this will not be financial advice, consultation or whatsoever, and there's no guarantee for the correctness of the provided data. I already see one joined, one viewer, so very happy to have you in, collega, or what is the female version of collega? I'm actually limited over here. However, so I guess we can start, and before, I hope it's working, and before we jump in, I want to quickly make sure. Oh, now it's working. I think I was muted, so hopefully I was not muted the first 2 minutes. However, one more time, quick disclaimer, in the upcoming minutes, no financial advice, consultation whatsoever, and there's no guarantee for correctness of the provided data. And now we will jump into the earnings screening on a finer detail in terms of press release about the earnings letter and about the earnings call of Grab, the Southeast Asian food delivery or delivery, mobility and financial service provider. And guys, before we jump in, a quick briefing about the stock itself. I hope you can see it. Yeah, that looks good. Just for those of you who are new to it, who are new to the channel, who are not experienced about Grab, 1 minute. So basically, you can see it here. Food has 3 major pillars of income. The first one is delivery. So we talk about food delivery, dishes delivery, grocery delivery, and of course express delivery, so packages, for instance, transporting from A to B. Then we have the second major income pillar, which is mobility service. You can see it here. You can go and book a ride, different kind of rides, rickshaw, cars, motorbikes, all this kind of different vehicles can get utilized through this functionality. And the third one, it's the platform financial services. So they provide basically payment services. So you can pay with their own service to book food delivery service or mobility, so ride services. And of course, they have full banking license in Malaysia, in Singapore, and now very new in Indonesia. Great deal, but we will talk later about it. And so they can provide all this kind of classic traditional digital bank services and products like loan, like credit, like providing an account for transferring deposits basically as a customer of Grab. And what makes it special, this whole environment is covered in one app, in one so-called super app. So Grab is really trying to proactively digging the synergies between those different major income pillars and even additional ones, like you can book accommodation or insurances through the app. But that's not a primary income source, more a secondary one. Okay guys, that's it when we talk about Grab in general. So 3 major income pillars connected through a super app, and the main target is really to dig this kind of synergies and network effects through the different services and products which get provided. And now we already jump into the actual earnings sheet and the actual earnings roundup session. So what we will cover today, as you can see here, is the second quarter 2024 earnings, which will have been announced and launched 1 week ago roughly. And during the live stream, sometimes, you know, I mean, I'm covering it for 1 hour, 1.5 hours most of the time, and do a lot of stuff spontaneous, and sometimes we need more time to screen the documents, need sleep a few nights over it to really create a final verdict, a final valuation and opinion about the results which have been provided by the management. And last but not least, of course, listening as well, or reading at least the transcript of the call and the communicated information by the management. And so yes, that is, I hope, okay, so I hope the sound is right, because before I wasn't 100% sure about this. Let me quickly, one moment, sorry for this, but let me quickly check with my smartphone if the sound is working well. Hold the line, please, hold the line. Sound is right, because before I wasn't 100% sure about this. Let me quickly... Okay, that sounds actually good. It seems like it's working. So we can go on with the stream, I guess. I don't want to disappoint any of the viewers and make them leave. So let's go on with it. And back to the PowerPoint slide deck. And guys, as you can see here, if you are used to my channel, then you know it. I always cover the earnings live based on some core short-term metrics. Yeah, here we have 3, which is basically the demand in terms of the 2 legacy major incomes pillars, deliveries and mobility. And then the second one is addressed to the financial service, so the payment service, but as well the new digital banking services. And the third one is addressed to the shareholder value orientation. So really how strong the management is taking care of the interest and the existence of their shareholders, like me for instance, in terms of not providing too much stock-based compensation to the staff and making sure that shareholder dilution takes place by doing this, for instance. Yeah, and you can see on the first glance it's quite red. It's quite red. I don't want to go too much into the details because I covered it as well 1 week ago. And if you're interested, check out the live stream. There is a chapter about the detailed screening. But what I can tell is there was only small spots of light in the darkness. One was the on-demand MTU. Maybe I share quickly the Excel sheet to show this, at least some positive highlights. That makes more fun most of the time than the negative ones. And you can see it right here. So in this row, on-demand MTU, on-demand means basically deliveries and mobility. And MTU is the monthly transactional user. So basically the active customers, let's say it like this. And when we go a little bit more to the right, we have here the second quarter year-on-year growth compared to the first quarter 2024 year-on-year growth. And it's quite stable and it's quite high, with last quarter 19% year-on-year and this time almost 20% year-on-year. So 90% would be already quite strong. It don't need to increase anymore, but it's great that it's even increasing and that the number 1 quarter later compared to the additions in terms of clients, active clients and users is even larger. Yeah, so that's definitely a positive one. And another one was the lowering of the financial service incentives. What means incentives? So basically, it's an option which can get used by the management to grant bonuses, discounts, this kind of stuff to the people who are ordering food, who are ordering the rides, or to their merchants, to the different stores, restaurants, for instance, supermarkets, or to the drivers who are driving and riding for Grab, to create more customer loyalty, to basically acquire more customers and create more attention and be most of the time a little bit more competitive, because granting better conditions than the other competitors in the market, which there are some of them, of course. And so I want to see that getting lower and lower per quarter. And in terms of financial service, you can see it here again. Second quarter Q&Q growth was negative, so it decreased by 42%, which is great, even stronger than last quarter. That definitely was a positive one. And the last aspect I want to cover, which was positive in terms of the metrics, and I didn't change at all my opinion about this in the past days, is the adjusted free cash flow development. You can see it here. They hit a level of 36 million US dollars, and doesn't sound too much when we talk about an overall revenue of 660 million US dollars. But however, I mean, they're coming straight from a negative spot. Yeah, as you can see, last quarter almost 100 million US dollars negative, and in the past 1 year ago it was 20 million negative, and even 200 million negative. Well, when we zoom a little bit more out to Q1 2023, so overall it decreased very heavily year on year with roughly 300%. So that's great as well. And that's it for the metrics of today, what I want to discuss. I guess at least that will be the case. And because I don't focus this too much, because we already discussed this 1 week ago, let's say it like this. Overall, everything else, all the other aspects, from my perspective, didn't look good and didn't have been designed that well. Sometimes there are reasons behind it, and we will discuss them now in a moment based on the press release details, based on the call details, the questions the analysts asked, and the answers communicated by the management during the call. However, the overall verdict was for me straight red, not really a strong tendency to neutral or something like this. I mean, they missed as well revenue and profit guidance, or let's say, I think they missed both. But they, let's say it like this, they just covered let me share it to you. They just covered the forecast by the analysts really one-to-one, as you can see here, in terms of profit, in terms of earnings per share, but actually they missed on revenue growth. And I mean, I guess most of you, like I'm invested for Grab because of profit growth and of revenue growth. And if both is not that surprising positive or something like this, for me it's a straight mess, and I need to color it negative and rate it negative. And this is what I did actually. Yeah? So overall, the rating, you can see the small metrics, top line, bottom line, and the details red most of the time. Overall verdict negative. And there is a key financial question, and it's the same like 1 quarter ago. A key question, what I would love to somehow get the answer right now already, because it would help me a lot. And for me, it's what financial power can the fintech business create? So not only the payment services, this older, more traditional one through the app, but really the digital bank services and products in Malaysia and Singapore and in Indonesia. That, and especially Indonesia, because I think the number of population over there is, I think there are 260 or 270 million citizens present. So almost 50% of the all population in Southeast Asia. So that's definitely a big market which they launched with their super bank, I think it's the name, in Indonesia, but we will talk later about this. However, I would not be invested in Grab if this kind of potential is not existing, this rollout of the third new pillar of banking business, because a lot of people over there in Southeast Asia are underbanked or unbanked, so there's a lot of potential to cover new customer base. And this is what I want to see, and that is my big question, if this will take place or not. But however, we will focus the highlights, which can be positive, neutral or negative as well, of the press release. And we start with the first one, and the only straight negative highlight from my perspective at least, and that is actually this is how it should be, the 2024 full year revenue target or guidance, and it might fail actually. You can see they just considered a headwind by currency exchange rate of 3.5%. And please let me share the screen one more time, the browser, and that is the Outlook slide which they utilize. And you can see here in the small part below, and I zoom in a little bit so you can read it a little bit better, I guess, on your screen. Let me check if that's large, a little bit smaller. Okay. And you can see this is an addition which was not existing actually in Q1 2024 press release slide deck. Yeah. So I guess that has an effect on it, and you can see they're assuming, and they're working with a revenue outlook which just considers this 3.5%. Yeah. And currently it's in the second quarter, so far it was 5.4% development. So they are a little bit in the negative behind of 2%. Yeah. So this is what we need to consider. So I assume the management is already, at least there is the risk, that the management's already preparing us as investors and the analysts as well, that there might be some trouble with achieving the revenue outlook for the full year. Just an assumption. I mean, I guess it's quite a realistic one, and we will see how everything will work out. But that is something what I don't like to see, that there is really a chance that we will miss it. LCL is using the chat, so I'm quickly checking it out. First of all, LCL, thank you very much for joining, and I highly appreciate that you're utilizing the chat. I love this very, very much. And LCL is writing, it will take place for sure. They are not on track to deliver, but the economic situation isn't a headwind at the moment. They called out long ago that 2025 will be much better revenue growth. As you mentioned, their free cash flow is improving, so they are stable, holding market share against Gojek, for example. Yeah, 100% right. Completely relate and share your opinion. Makes perfect sense. And I'm overall, I don't want to spoil too early during this call, during the session, but overall, I'm actually quite convinced. Yeah, even though the price tanked a little bit after the earnings result and on the next day, if I would be not out of money, maybe I even would think about to invest more money in it. Yeah, so it can be the case that the results itself are negative, but you always need to, of course, keep in mind what is the valuation of the stock. Yeah, and if I think before already it's, for instance, priced quite fairly, yeah, then it's absolutely fine that you miss a little bit, or even it's okay, I think, for everyone who's not investing on the strong short term to just invest for the next earnings call, and if there's a miss, you leave the investment. Yeah, this is at least not how I invest. You put these numbers, they raised the guidance. Yeah, but they didn't raise the, I think they only raised the group adjusted EBITDA guidance, right? For in Q1 actually, or what kind of guidance they raised. I mean, of course, adjusted free cash flow was added. But let's go through it a little bit further. Again, please stick to use the chat, and I will check it out here and there. But I will talk a little bit why I think 3.5% is, there's a reason why they're stating this, just my personal opinion, of course. But why I still think, okay, or why I keep my shares and I'm still very confident. I mean, there are a lot of information which have been communicated, which are interesting in this regard. So let's come back and let's go a little bit more to the neutral side of information. Then we come to the positive one, which definitely have more weight in than the other ones. And you can see here that what I liked, I mean, basically what I didn't like, first of all, is that the incentives, this kind of bonuses which getting granted to riders, to merchants, and to the customers of Super App, they increased year on year by 7.6%. That's quite high, and I would love it would increase on a lower level. But on the other hand, what I liked is that the on-demand GMV, so the cross merchandise value, that is increasing, yeah, by 5% more actually year on year. Yeah, so I mean, that is a little bit like the, let's call it gross revenue, the money which really getting made through the app, through the merchants. So as, let's say, someone is ordering $100 food, yeah, or $100 food, then the GMV is $100, and if Grab has a take rate, they're casting, let's say, 20% fee, then the revenue out of it will be $20. Yeah, so GMV is a very relevant number, and it's great to see that at least from the ratio, the incentives, they develop negative, but still better, or let's say less worse than in terms of the GMV. I think that's definitely a crucial aspect. But I keep it on a neutral, because in general I would love to see that the incentives not growing at all, or at least on a lower scale. Yeah. However, let's go on, and we talk now about the advertisement. You need to know that till first quarter of this year, they displayed their results, their earnings results, in another way. They had actually 4 major pillars of income: deliveries, mobility, financial services, and I think other income or something like this. And that was basically driven by advertisement. And now they decided in the first quarter, before the first quarter, in the first quarter the first time present their results and put the advertisement income and diversify it in the other three major incomes. Yeah? So when you, for instance, advertisement getting launched and displayed in the delivery section to restaurants, for instance, restaurants are displaying special discounts and offers, and they want to create more attention, so they're booking advertisement space, for instance. This is now getting directly addressed to the delivery income pillar and not anymore excluded. And so, however, this is still a business case and it's still growing very, very strongly. As you can see here, we're talking about the 56% year-on-year monthly active advertiser growth. And those active advertisers, they spend 26% more on average year-on-year. So that's amazing. I mean, of course, it always depends on the fundament where you come from in terms of, you know, when it was before originally 10 million spent, it's not that much. But in general, it had already a certain level, which was interesting, and it's growing stronger. So that's as well a good indication. However, I will not weight this in too heavily. And the last aspect on the neutral perspective for today, based on the press release, is the strong currency adjusted revenue growth. Yeah. So on there, I need to come back to LCL, who's I guess still present in the stream. I hope at least he is, and he's kind of right for sure. I mean, there's for instance, there is let's say a little bit headwind existing in terms of the currency development, yeah, the exchange currency, so the FX rate basically. But you can see that if we exclude it just in terms of the core business, yeah, without any consideration of the currency, we will have a result of 17% year-on-year growth revenue, but with excluding, basically calculating out the currency exchange rate and development, we're talking about 6% higher results, so roughly 23%. And that is a very, very strong result. And that is, again, one more time, way nice, LCL, nice that you are still in. And that is, of course, higher than the expected 14 to 17 year-on-year % revenue growth. Yeah, so that is already the first information, or the first aspect for me where I say absolutely, LCL is absolutely right from my perspective, share 100% your opinion, that on the first glance, yes, maybe 17% doesn't look that great, even though it's on the upper range of the target. However, with considering one-to-one the currency development, it's getting very, very strong actually. Yeah. But now we come really to the positive parameters. And these are four which we will cover today in terms of the press release. And the first one is the driver reputation, which is very, very positive. Yeah. So there's this triangle one more time between the drivers and the riders, the customers who are ordering the different services and products, and the merchants, yeah, the stores, food stores, whatsoever. And from my perspective, it's very, very essential that all of those three in this triangle are satisfied and it's in balance, yeah. It's not like, it can't be the case that customers getting the best conditions, let's say like this, and on the other hand, the riders, so kind of staff members of Grab, are suffering under their payments, yeah, and they are messed up and drive around with bad mood and communicate this and let this know their customers, for instance, yeah. So I think all of them need to be satisfied. It's the key, I think, where not everyone takes a look at, but I think the reality is like this actually. And I like that the reputation is going up, and that's basically my interpretation, yeah. Based on that, I can see, okay, the monthly year-on-year active driver growth increased by 13%, yeah, so the number is increasing, it's not decreasing. And on the other hand, way more important actually for me, the retention rate in terms of driver is at 90%. Yeah, so really 9 of 10 drivers stay loyal, they stick to the business, they stick to delivering for Grab, and that is nice. It's always more easy to keep the stuff than finding new stuff. It's more easy to not train them one more time and teach them how to do the different stuff. They are experienced, they know how to act, yeah, and that is very nice that they achieve this kind of level of loyalty, let's say it like this. Another positive aspect is the 2024 full year guidance, that it's received a new parameter, and therefore, or in this regard, we can go back to the guidance and to the outlook slide. And you can see it here. This one is actually new. So this one was not integrated at this sheet in Q1 2024, but now they are confident that adjusted free cash flow will develop very, very strongly and will be positive for the full year, first time in company history. And actually they mentioned during the earnings call last quarter that they have strong belief in the development in adjusted free cash flow for second half of this business year. Especially Q4 is seasonality wise traditionally a good one. And yeah, let's see how this will run out. So I expect there might be a really good surprise actually. Yeah, LCL, you are 100% right. So one more time. LCL, we should do together this earnings streams actually. I have the feeling because you're adding very good information. So LCL here in the chat. And others who are joining, you can of course participate as well. Feel free to share your opinion, even though it's different from mine. I like to discuss it. Yeah. However, LCL is mentioning that this aspect in terms of driver reputation is positive, monthly active drivers and driver retention rate. That's as well an indicator which underlines the dominance of Grab in the Southeast Asian market. So the positioning in the market and yeah, basically the standing overall of Grab, not only in terms of achieving more customers, higher revenue, higher GMV, but as well making sure the drivers stay on their side. However, let's go on. We already covered two positive metrics, and I won't go to the first bullet point over here, and that is what do we have here? Yeah, you can see here as well a dominant indicator, basically, like as LCL mentioned, is additional growth in terms of monthly transactional users. Yeah, so it was already quite high with 15.6% year-on-year growth in Q1 2024, and even increased to 72% in second quarter. Yeah, so that is as well combining with this. That shows really how dominant Grab is, and they don't losing part of the cake to new players, to other players like Foodpanda, like Gojek or whatsoever, but they stay really solid over there. And I mean, competition in the food delivery business, everyone who, no matter where you're located, and I'm located in Leipzig in Germany, for instance, in Europe, here many different players like Wolt, like GitHub, they are, or Delivery Hero, they are existing here and they're pushing the business forward. Yeah, so competition is definitely a big aspect, and creating loyalty on this magic triangle, let's say it like this, I think is definitely the challenge which actually is existing. And if you can manage that, business is running very stable, and you can save incentives actually in the future. However, guys, let's go on with the last bullet point, and for me this position is the most important one. And they communicated in the press release that the fundament of the digibank business is actually built out and existing. And look, when you see, I interpret this basically on the numbers when we talk about customer deposit growth. Yeah, so it was just quarter on quarter 52% growth, and they achieved the level of 750,000 deposit customers. And yes, of course, just that people establishing their accounts, their bank accounts on the digibanks, yeah, GX, GXS and Superbank is not worth so much, yeah, but it shows that they're transferring, they're using the services, they're accepting it, they're adapting to the service, to the new banks, the new digital banks of Grab. They're trusting the company by transferring their money to their accounts, and as soon as this door is open, both parties, basically the bank customers and Grab itself, they can utilize their service and roll out further services to the bank customers, basically. Yeah, so that is for me the absolute strongest signs, because for me it's a big indication that my key question, what financial power can the fintech business create? I mean, it's not answering the question, but at least it shows that the fundament is existing. Yeah, so I like this very much. And here one more addition. by LCL, so I check it out. Going deep is the best, and they are building a functional ecosystem. That's why I like the pick. Yeah, share it. I will give them minimum 2 or 3 more quarters and let them play out the thesis for building enough market share. 100%, 100%. I think really the ball, if we would think it's a tennis match, let's say it like this, the ball is a control of Grab. That is my feeling as well. And they're preparing everything perfectly. And like really like every good growth company, you can't rate it right now on profit or whatsoever, yeah? Or on incentive spend, 1-to-1. That's not the case. They really try to dig a huge potential of market share and create some kind of almost moat, let's say it like this, with brand awareness, with incentives, with the loyalty of the different stakeholders, yeah? And when they think it's ready, then they can push it forward and really try to make profit. And I think they are perfectly on track in this regard. Just my opinion, and I think LCL is sharing this opinion. And I go on a little bit. Now I will take care of the actually a little bit more interesting part, maybe for those who don't check on a regular basis the call. So I fetched together for me the core essence of the call and what the management has communicated as well, based on the questions of the analysts who participated. However, we will start with the overall impression first, and you can see that I was quite impressed about the deepness of the quantitative information already, which was in the introduction part communicated by the management, by the CEO and CFO. So I mean, at some companies and in some quarters as well at Grab, they're not pushing so many numbers in their first statement, in the first 10, 15 minutes, 20 minutes. But I was quite impressed by it, and I liked it very, very much. And another aspect what I liked, actually, when we talk about the overall impression, what I kept in my mind, my memory, is basically a more negative one. I had the feeling that some critical analyst questions, management didn't react that accurately and satisfyingly with their answers to them. At least I wasn't 100% satisfied, and I noted down 2 examples, and of course that is as well my opinion, my interpretation. Maybe the analyst who asked the question could work with it perfectly. I personally not. And an example is, you can see here, I mean, they ask, okay, what is going on? Incentives growth taking place, why no increasement in competition? Yeah, so they ask why, when there is not so much competition going on, why you need to grant further bonuses to the riders, to the merchants, and to the customers of Grab. Yeah, so and that's for me a relevant question. And of course they responded to both questions which I'm stating here, but again, one more time, from my perspective, not on a satisfying level. Just my opinion. And another question here, another example was why is the stock-based compensation growth quite high when the headcount getting reduced more and more? Yeah, so they cut down the headcount, they cut down the expenses over here, administrative expenses, for instance. And why on the same level the stock-based compensation increases? So I can share here quickly as well one more time the numbers, if you are interested in it. Here we have them, and you can see it here first, the absolute number, and it's increased. Wait, I go right, and you can see it here in this row. It increased in this quarter year on year by 26%. The quarter before just minus 9%. Yeah, maybe there's as well some. I don't know what is the reason actually. I don't know what is the reason. I don't have this insights. Yeah, maybe I already want to start to push some awkward teases, but it's nonsense in my opinion. Before I tell any BS, I tell nothing, I guess. However, so it increased quite heavily with 26% year on year. And yes, I mean, when we compare it, the stock-based compensation share of revenue, so the ratio, it's lower than the quarter before, for instance. But here it's still higher than 1 year ago. 1 year ago it was 11.5. Now it's 12.3. So something what I don't like to see, but maybe there is some delay in the headcount cut-off process, yeah, and it's not 1-to-1 that they mention. Okay, we will whatever, fire some and release some staff members, and immediately it has an impact on the stock-based compensation, or on the shareholder dilution, let's say it like this. Yeah. However, now we go to the interesting part, and that are actually the details and the highlights, which are 1.5 slides in terms of the call. And we start with the first one, and that's here is not, it's not a specific order here. Yeah. So some are more positive, some more negative or neutral one, or just informative, let's say it like this, informative. However, that one at the beginning, it's chronological, so I'm reading the transcript and I write it down, and that's it. That is for me almost one of the most favorite ones, and that's actually, as you can see here, finally the digital banking business in Indonesia was launched in June, so roughly 2 months ago, and it is the January, February, March, April, May, June, so in the last month of second quarter. So couldn't add so much deposits, for instance, deposit level or new banking customers to it, because it's just one month of this quarter of Q2. However, you can see they achieved more than 1 million deposit customers in less than 2 months. Yeah, that's crazy. That's crazy. Actually, I'm sometimes a little bit confused about this information, because it's not always perfectly in line when I think, okay, they launched it soon, but I guess very likely they're considering as well already July, yeah, with this 1 million plus deposit customers in 2 months. So I guess June and July is considered. So the first month of Q3 is already considered as well, because Grab is actually doing this sometimes. And that is a big one. That is really a big one from my perspective. And as I mentioned again, the biggest market in Southeast Asia, a strong expected GDP growth, population growth, man, and that's crazy. I mean, I think, what was it when we talk about GX and GXS banks, so the Grab other digital banks in Malaysia and Singapore, I think it took, how much did it took? I think it took 8-9 months, something like this, for 750 or for 500,000 customers. So this here is developing very, very quickly, crazy, and it's just in the early stage. So Super Bank, you can check it out as well. You can follow it on LinkedIn if you like. They're sharing a lot of information, posts and this kind of stuff, very interesting. And if you take a look, or if you watch and join my stock news episode on Thursday, I will share as well some Super Bank news of the past weeks. So very, very interesting information from my perspective, at least. So that's a strong indicator. However, some other information here. So they have, Grab is basically providing a saver delivery option, so you can save money. Yeah, you can have a premium one, so you get your delivery quicker. You get the standard one, which is in a good balance between price and delivery time, and then you get the saver option where you save money, but the delivery is getting bundled. Yeah. And so multiple deliveries from multiple customers, for instance, getting transferred by one rider who's going first to the first restaurant, then to the next one, and then delivering and dropping them basically to different customers. And they are growing very, very strongly. And what I like about this is that it creates as well a mode kind of it, because it's unique. Yeah, not every player very likely is providing it. I'm not sure even if Foodpanda, for instance, food delivery service, which is very present as well in Southeast Asia, and actually a daughter company of Delivery Hero, which is a German company in the food industry, in the delivery food industry. I'm not sure if they're providing this kind of options, but I guess I strongly imagine that Grab did the first move, initiated it, and is already ahead with it. And that as well creates loyalty, I guess, because if you are used to pay low but wait a little bit longer, you will not that easily go to another player and accept higher fees. Yeah. Then another interesting aspect is they are not only existing, the saver delivery options not only existing in the delivery part, but saver options as well existing in the mobility part, and that generates new customers. And this is a little bit awkward to read, but this is how the management actually communicated it. So you can see it here, 15% of the new monthly transactional users joining through safe delivery. So actually it's not creating just customer loyalty, but it makes sure So making sure that the business is more sticky to the customers, but it makes sure that a comparatively high stack is joining while they're using this functionality. And that is really nice. That shows that even a small aspect can have an big impact on the business, let's say like this, yeah. And another one is when we talk about mobility business, that when we talk about the overall number of new MTU so group MTU of all Grab, that 14% of them joining through the saver mobility function. Yeah, crazy. Sounds for me already almost too high, but it is. I mean, no guarantee for correctness of the provided data, but sounds very, very strong and very, very appealing. I like to see this. And actually the management, I think they have been asked, okay, what is going on with the drivers for the future? And they stated that really this saver function in terms of delivery and mobility is a strong deal and really one of the main drivers right now in terms of reaching out new customers. Then very interesting sub-business of Grab is Move It in Philippines, and they re-accelerated basically the business, especially the motorbike riding and mobility business, let's say it like this. And there they experience a very high number of 92% MTU year-on-year growth. That is as well a strong highlight for me because first of all, as you know, I like this potential in banking business, but in general, it is something I'm waiting for, and they have this kind of, I think it's called in Singapore, flex loan function or product. Yeah, so banking customers can get a loan through this flex loan option. And this option, and I think in general the lending products are still not live in Malaysia, and Malaysia has way larger population than, for instance, Singapore, even though, or let's say, of course we need to consider it, the single person in Singapore is way more financially stronger than the Malaysian one. However, way more population existing Malaysia than Singapore, and those lending products are simply not live. Yeah, so really this acceleration, what is taking place now with the super bank in Indonesia and what already took place in Singapore, here is so much potential left. And I mean, I'm invested in Nubank in Latin America, Brazil, Colombia, and Mexico, and you can check out new, and you can see what my big hope is when we talk about this banking business, what can happen maybe in Southeast Asia in the future. Then we have here the 90 days period non-payment loans. So basically the rate where Grab need to expect to write off the loans in worst case, let's say it like this, is only at 2%. So the lower the better. Yeah. So basically this is they expect that maybe 2% they can't collect of the loans. And so that is quite low compared to other companies. Other banks have a lot of times 4, 5, 6, 7%, something like this. So 2% is still on a very solid level. Let's go to the next position. And here we see that that not only the drivers are very loyal and the customers very likely as well, but the merchants, so again the supermarkets, the food stores, whatsoever, they as well, because they try this, or they achieve this with their super energy synergies, let's say it like this. That's the core message here. You can see it here, super app synergy example. Yeah, this kind of key final target of Grab to really make sure that the customers stick in the super app and utilizing all of the different products and services. This is here an example why this is taking place, and you can see, I mean, of course the merchants can utilize loans as well from the digital bank and the payment services, and you can see if they are doing this, the retention, so the loyalty basically is 1.5 times higher in the past 6 months if they going for these loans than if they compared to the situation when they don't go for the loan. Yeah, so it's the business get way more sticky by services which are actually not the direct food business, for instance. And that's the same when we talk about the drivers. They generate, when they are a customer of basically the loan business, then they generate twice the size of earnings than a driver which is a customer of the loan service. Yeah, so that's crazy. I mean, there you can see as well, they all not only can go for the MTU, for the monthly transactional users, they have as well a big base of merchants, they have a big base of riders and drivers who can be as well customers of their banking business in the future. So, man, when you think about this, who knows what will be the future, what will come in the future and how it will look, yeah, but strong potential. 2 words, strong potential. Okay, guys, and let's go on. And that is as well something quite interesting. And that is already what LCL mentioned basically in the chat and what I discussed as well on the side. I mean, the currency headwind is quite strong. It's quite strong with roughly 5.4%, higher than expected, and it affects really the on-demand GMV, and it affects the revenue year-on-year growth. Yeah, so this is what we need to consider. But however, we can already talk about the last. Is it the last one? Is it mentioned here? Yeah, here the last bullet point of this page, because that comes in hand a little bit with it. And you can see the mention on the other hand, a few moments later, they mentioned that despite the currency headwind was a big negative aspect on Q2 2024, in Q3 actually, so in the ongoing quarter, the US dollar starts getting weaker by roughly 4%. And it seems like this headwind getting weaker and weaker. And so it looks like guidance is on track, no matter if we talk about Q3 or 2024 full year guidance. So not the best development in terms of FX rate during Q2, but it looks already better right now, at least the potential and the development. And what they mentioned as well is, I mean, they stated one more time, like in the investors deck as well from I think 2023, their mid and long-term target of 4% delivery and 9% mobility adjusted EBITDA margin is still on track, and the break-even target for the digibank business, what was just rolled out in Q4 2023, so quite new business, and again, Superbank just in June. So a very new business. They're still going for the break-even point or the point of break-even in 2026. So as well, very strong news from my perspective. They stick to their confidence over here. Then a side note is they purchased roughly for 131 million US dollars shares back in the past quarter. Quite a high amount of money if you think about that. They're achieving revenue of I think 600. Well, let me quickly peek. 660 million US dollars. However, keep in mind they provided 82 million stock-based compensation just in Q2. So yeah, they're pushing this out as well. It's not one-to-one that the amount of shares in the public area which are accessible just getting lower, and all of our shares as a shareholder getting more value. That's not the case. They definitely push out further shares to their stuff. Yeah? However, they mentioned it. The last bullet point we talked already. Now we go to the finish line with the last 4 aspects in terms of the call. And the first one is they are very strong about the outcome of the second half of 2024. And actually they are even considering negative impacts, potential aspects like the typhoon season, for instance, which will start soon, yeah, and which of course has an impact on the business itself. However, that is very nice to see, and that is as well a strong indication that they are online in terms of their full year guidance, and there's really no need to have too much doubt. The only doubt I have is basically is connected to the currency rate, however, currency exchange rate. but however, all this other information convincing me that I trust the management, they will cover it, they can make it happen with the full year guidance, and even maybe provide strong beats in the third and the fourth quarter. And they already stated actually that it's not that unlikely, because they expect that they will land with their just EBITDA guidance on the upper part. So what is the upper part? One more time, sharing the guidance for full year, and you can see it here. So we talk about $270 million adjusted group EBITDA. Strong one when you consider, I think last year, if I'm not mistaken, was the first full year of group positive adjusted EBITDA, and now it's already going to good 3-digit million level. Nice one. One more interesting aspect, as I mentioned, they have the saver option, but as well they have premium mobility offers and options. And those options, when they offer it, they result in a 2 times higher revenue than compared to the regular mobility service. And one more time, actually more interesting for me, the drivers itself, their earnings increase by 200%. So it's getting tripled, yeah, if they go for this premium version. And you can see that most of the tourists are here, let's say most of the tourists, but a large number of tourists, 20% of overall premium users are tourists actually. So they really make a difference and create an USP between their service and maybe other services in terms of ride hailing and mobility services, and make sure that even maybe tourists who like to drive in the back seat in better cars, for instance, they are going for it. Nice to see. And the last one is actually a little bit negative one, but it is how it is, nothing new actually, but they pointed it out after an analyst was asking what is going on with it. So the Grab planned already, I think, at least a year ago, they wanted to acquire a company which is Transcap in Singapore. And Transcap in Singapore is the third largest taxi operator over there. And unfortunately, because of antitrust concerns, the responsible Singaporean authority denied the deal. Yeah, so no Transcap acquisition. They will now want to cooperate a little bit and merge their apps and their services and try to dig as well some synergies, but let's see how it works. And actually that is nothing new. I mean, Grab wanted to acquire as well Foodpanda, one of the main competitors in the Southeast Asian market, at the end of last year, beginning of this year, and it failed as well. I mean, the reasons are not, I think, not really public. I think I read something that the acquisition price of, I think, something like 1.2 billion, if I remember correctly, US dollars, was too high or whatsoever. But I guess another reason is it's just simply, first of all, difficult for Grab to make this merge and acquisition activities happen successfully because of this antitrust issue and concerns by the authorities in all of their markets where they're active, because they have already that strong positioning. And another aspect is they have the strong positioning even without that many acquisitions. Yeah, they are simply very competitive. We talked about a few numbers today, a few KPIs which display how competitive they are. And I guess they not really rely on this Transcap acquisition. They can get even further share without, and staying very competitive, and yeah, basically have their position in the game. That's it when we talk about the call highlights. Yeah, so overall way more positive. Overall, when we talk about the details of the highlights of the press release, quite positive. Yes, some metrics in terms of numbers didn't on the first glance convince me, and I don't want to change my opinion here, and the verdict stays negative. But when you really consider the press release details and the call details, it looks quite nice. And now I give you a little bit a further verdict and my personal information, how I will act and behave right now in terms of Grab. So you can see here an valuation table basically. This one is from last day of July, 31 of July, so roughly 20 days old, and this one is from yesterday. And please take a look at the row of Grab. The other stuff is not that interesting, but you can compare it, at least if you like, to other companies you know, maybe you know maybe, and yeah, you have an idea how good or how bad it is. However, I mean, sales growth expected for 2024, 2025 was, from my perspective, 19%, and now based on different information, guidance, analyst calls, it's 17%, so it lowered a little bit. I guess it can be even higher, but it lowered a little bit, tanked a little bit. We talk about EV to sales. Here was a big differentiation happened. So before 2024, 2025, it's 3, the ratio. So 3 times the EV is in terms of sales. Yeah, sales, let's say 3 billion, for instance, then the EV will be 9 billion, the enterprise value. Yeah, and that lowered this ratio to 2.6. So that is actually a good development, a very good one. And it's not that expensive anymore, especially when you compare it to other companies. And now we take a look at the PE, and PE is actually not existing, so we can skip that very quickly. So it's a negative one. We can see how this will run out in the future. But again, I guess if they want to switch the button and push profit, they can make it happen already now if they really like. However, they go on for expansion, revenue growth, banking business, and I like this very, very much. So, however, it's not a positive PE existing. When we talk about the overall fair price multiplicator, which is just an idea, and basically it's a tool to compare different companies to each other, and of course you need to consider as well the different sectors they are active in. Yeah, and Grab again is a little bit food delivery, is a little bit mobility, so maybe you could compare it very good to Uber, which is not listed here, but you can compare it as well to Nu and to PayPal a little bit with the banking business, even though it's a small chunk of it. However, 1.1 is not a very good fair price multiplicator from my perspective. Yeah, so my idea is about this, and I created by myself, even though it's not too sophisticated, honestly, but at least it's an indication. 1 or below is not really looking that great. Yeah, and with 1.1, it's not on the first glance convincing. But you need to keep in mind it was already lower. I think even when I purchased it, it was on 1 or something like this. So the stock price sticks more or less quite solid on the same level in the past quarters actually, but everything else is developing great from my perspective. It's developing very, very good. And maybe Grab is just a company, especially when for emerging market, 1.1 is definitely not good actually. Yeah, for the political risks, currency exchange rates, economical dependencies, China risk close by, for instance. That is all what you need to consider. And 1.1 is not the best on the first glance, but really Grab has so much potential in it. And I think there's really a solid reason why it's not evaluated on a low scale, but more on a fair or even a high scale, because all of this traditional business, deliveries, mobility is good. They have such a strong standing in the market, from my perspective, already in a lot of directions, good mode, I think, as well. Customers, merchants, and riders seem to be satisfied with everything. So it's going so well. They can roll out way more services and products in the future we are not even thinking the slightest about right now. And so alone the banking business, one more time, I would never be invested without the banking business, just my opinion. But this banking business, this digibank business, GX in Malaysia, GXS in Singapore, and Superbank now launched in June in Indonesia, that alone has so much potential in it when you compare it to Nu, for instance, that I think, from my perspective, it's fair valued. And one more time, if I would not be already invested, and that is no recommendation or whatsoever, again, that's just entertainment and I'm sharing my opinion here, and I'm not a professional one, but if I would not be already invested with more or less the same amount, which is roughly, I think, $11,000 right now, like I originally invested it at the end of last year, so 8 months ago, I would very likely start to invest in it. Yeah, for me, even though the results I rated them negative, and even though the fair price multiplicator on the first glance doesn't look so well, for me it's a good hold, especially on the mid and long term. Short term, who knows what will happen. We have seen it takes time. The last quarter is not so much volatility in the stock, not so much development, but that's my verdict when we talk about this. And the reason or the outcome of this is, as you can see here, out of the 6 stocks I'm currently a shareholder of, Grab, even though maybe this fair price multiplicator doesn't look like it, is out of the 6 stocks my third favorite ranked one, yeah, after HIMS, then a big gap, then new, then a big gap, and then Grab, and then a big gap, and the other 3, yeah. So the other 3, position 4, 5, and 6, Sentinel-1, Alphen and Stoneco are a little bit closer to each other, and I would sell them quicker than those 3, but yeah. And Grab really, I mean, the numbers, I'm waiting for really good numbers. I'm waiting for the big hit. I'm waiting for the really strong information about the banking business. And I guess as soon that comes, then people will recognize what is going on and what potential is existing in Grab. At least that is my assumption. And then it can maybe even switch to the second rank. Let's see. But however, it takes time. And if it takes 2 more years, 3 more years, they mentioned break even in the digital banking business 2026 is the target. If it takes those 2.5 years more, it takes 2.5 years more. I'm ready for it. No problem. No problem at all. Okay, and if it drops further, actually I will purchase as well further shares. Yeah. So that's it for this. And now we come to a quick outlook about the rest of the earnings season. You can see the companies I'm invested in and their Q2 2024 earnings dates. And what comes next is tomorrow actually Alphen. Alphen is a European player and vendor of electrical hardware and devices, so substations, EV chargers for the automotive sector, and energy storage systems, ESS. And it dropped very, very heavily. If you're not aware and knowledge about the stock, check it out how the stock price dropped and under which kind of KPIs it's running currently. I mean, you can see it here as well. By far the best fair price multiplicator, very low EV sales, and there's still some sales growth potential left for 2024, 2025, even though I have big doubts, especially with 2024. So that's a big box of surprises, let's say it like this. We don't know what is inside, like James Ryan movie, not sure if you know it, this guy with his box of chocolate and he opens it and everything is surprising like the life. Yeah, that was his comparison basically in this movie, Hollywood movie with Tom Hanks. Yeah, so Alphen is a little bit like this box, I guess, yeah. Even though I think the number of chocolate inside of this box is quite limited. However, if you're interested about figuring out some information about a quite exciting player in the European market, in a good market I think for their products and services, check out tomorrow live earnings at 11:30 a.m. ET or 5:30 p.m. CEST. I will be sure here if I'm not getting sick from today to tomorrow, but I guess that's not the case. And one day after I will go on with my stock news episodes. It will be the second one, and from September on I will launch one each week, and I will cover the regular 6 stocks I'm always covering here, the 6 companies, and I always try to provide you and supply you with the hottest new updates about those companies. I already dropped a very hot one yesterday about Stoneco new as a teaser. I will as well share some information, for instance, about Superbank, as I already mentioned, so that will be interesting as well, I guess. And the week afterwards, so next week Tuesday will actually be Sentinel-1. Sentinel-1 will take place, and endpoint cloud and identity security out of the US. Very interesting as well because of this outage situation with CrowdStrike, one of the biggest cloud security and general security, cybersecurity providers in the globe, in the world. So as well developing quite huge at the moment. Let's see what will this be. Will be my first Sentinel-1 call. And now last but not least, I will check the last 2 comments in the chat of LCL, and he's mentioning, in terms of Grab, I have been to Indonesia a couple months ago, and it's head-on-head race between them, and it's the most important market in Indonesia. Yeah, I guess he's talking about the competition of Gojek, of Goto. The mother company is, parent company is called Goto, and the actual player as a customer, you can see it is Gojek. And yeah, Gojek and Grab are always very head-to-head about their services in terms of on-demand, so mobility and deliveries. And I hope somehow that maybe, for instance, as well, the banking business, Superbank, is creating by the synergies as well more attraction and appealing to the customers of Grab. And maybe by this, customer shifting from Gojek to Grab in this Indonesian core market, this really basically difference-making market, Indonesia, really, that so much impact will come out of it. And LCL is adding some other stuff, some other information to chat. The street will look at Southeast Asian markets again. At the moment, they have their eyes on Sea Limited, and the more they run, the more their eyes are falling on the next smaller players, and then it's Grab. And yeah, 100% right. I mean, LCL, I'm not sure if you watched my only stock analysis I ever created, actually, and publicated here on the channel, and it was about Grab in the length of a movie, of a blockbuster of, I think, 1.5 hours or something like this. And it took so much time. I'm quite happy with the result, but it took so much time that I've decided I need more time for doing this. So maybe next year I cover more stock analysis, and I will purchase other stocks in the future. Currently, I'm very happy with the portfolio. However, I mentioned the exact same. So Grab is living a little bit in the shadow of Sea Limited, as well, a company for providing a platform for e-commerce like Amazon. And they're providing actually as well food delivery, as far as I know, delivery services in some countries, I think in Thailand or Vietnam. And of course, banking and Gamnesa, I think, or how it's called, the gaming business. And for me, I was a Sea Limited investor in the past, I think 2 years ago, something like this. 2-3 years ago even, maybe. Time is running. And honestly, I don't understand at all why the Sea Limit focus is so high. Yes, it's a larger company, but there's Sea Limit and nothing else in Southeast Asia, basically. Yeah, it's awkward almost. And it is how it is. I can live with this. But the truth is, there's a reason why I decided for Grab and against Sea Limited. And I would always at the moment do it, and I will stick to my decision over here. So, and yeah, you are right. There's as well some potential that if Sea is performing well and executing well, and they do currently, actually especially very well as well with their banking businesses, and they are direct competitor to Grab. So yeah, let's see what will be the outcome, but that's actually a nice perspective from you, I need to say, LCL, because I mean, competition can be good. And that is an example why competition can be good. It creates focus on the overall market. Guys in Europe, people in Europe like me, or in the Western world in general, in the US, I guess the focus on companies who are a lot of time very good managed and run in Southeast Asian countries, they're not getting any attention, basically. Yeah, not any attention, especially nowadays in emerging markets, while AI stocks and cloud stocks and this kind of stuff is running so well. Yeah, all the software companies since years, basically. I understand this, yeah, but I guess some of us, and myself, I would consider me to this group. I try to prepare myself to be ready when the focus shifts a little bit, and I guess Grab can be really one who's participating on this development. And actually, I invest always like this. And I think there are two new chat comments live, and I need to check it out, not through my software, but through the official. Yes, was great, good movie. Garena, yes, okay. We got everything else here. I've read your comments. Guys, thank you so much for joining the stream. If you are satisfied what I've communicated here, and not only with the information of LCL, thank you very much, colleague, for your support. Like this very much, and hope you stay loyal as well. Like the customers of Grab, you stay loyal to me here at the stream. However, always if you enjoyed what you have seen here in the past moments, maybe it helped you somehow, it was supportive, this information, please feel free to like the stream, like the video, leave a subscription to my YouTube channel, follow me on X, on Instagram and on Reddit. I would highly appreciate this, and that always keeps me motivated. Yeah, you're very welcome, LCL. Appreciate it as well, and see you soon, hopefully. And yeah, make sure to join the further streams in the future. I only stream right now. And guys, thank you very much for having you in. Again, one more time, make sure you do your own due diligence, research process and your own investment decision. It's your own money. Don't rely too much on my information. Maybe it's not even correct. I always try to be accurate, but I'm just a human. Guys, most important, stay healthy, take care of yourself. Most important in life is health. I have a little bit issue at the moment with my right foot, actually. So that's the reason why I moved a little bit to a new room of my apartment and sitting here with my office chair. Regularly, it's not located here in the kitchen, actually. So now I need to take care of my food, and that shows that money is not worth anything. You know, I mean, community, the social environment, and of course, at the end, health. So take care of this most primarily. And all the best. See you next time. And very thankful for the feedback, LCL, that you have mentioned that I've providing good insights and inputs. I love this, and I can always only reply the same to you, actually, that you as well integrate a lot of nice information, and this is how we raise a good community. And maybe even in 5 or in 10 years we can sit at the sun of life, you know, at the beach and enjoy a cocktail or whatsoever, or some good food, and everything went well with Grab. And if not, at least it was an exciting period of our life, and it was excited to be part of it, of the investment story or the company story of a company like Grab. Okay guys, that's it for today. Cheers, see you next time. Bye. A sense of capital.